Imagine a bank that strengthens its core engine but finds the journey unexpectedly rough. In the first quarter of 2026, Security Bank widened its net interest margin to 5.36%, up from 4.51% a year earlier. Net interest income surged nearly 28%, fueled by rising interest earnings and lower funding costs. This margin expansion is typically a welcome sign. The bank's balance sheet breathes easier, and profits should follow. Yet, the bottom line tells a more complicated story. Net income slipped to 2.70 billion pesos from last year's 2.82 billion pesos. Earnings per share fell, despite healthy core spread gains. What happened? The answer begins with credit provisioning. Security Bank set aside 3.88 billion pesos against potential loan losses, up 63% year-on-year. Management called it prudent risk management amid volatile conditions. The reality: much of the bank's improved earnings power was absorbed by heavier loss reserves. Market volatility added to the challenge. Trading in securities swung to a 713 million peso loss, while foreign exchange losses reached 978 million pesos. Non-interest income weakened, cutting into overall profits. Despite a rise in operating income, these setbacks interrupted the conversion of revenue into clean profit. Comprehensive income took another hit. Unrealized mark-to-market losses on the bank's securities portfolio drove total comprehensive income to a 744 million peso loss, compared with the 3.8 billion pesos gain a year earlier. It's a reminder: even strong core profits can be overshadowed by fluctuations in fair value. Looking deeper, asset quality showed mild strain. The net non-performing loan ratio edged up, NPL coverage eased, and loan balances softened, even as deposits grew. The bank remained liquid and well capitalized, with ratios comfortably above regulatory thresholds, a clear strength for future resilience. For investors and analysts, the quarter invites a key distinction. Security Bank achieved margin expansion, but not earnings expansion. The message is measured, not bearish. If core spreads persist, if loan growth resumes, and if provisions stabilize, profits may follow. Until then, Security Bank's spread engine is stronger, but the road remains uneven. The story reflects both confidence in the bank's foundation and caution amid ongoing challenges, guiding a thoughtful, informed outlook for what lies ahead.